Hi, thanks for joining me. Steve Cologne with Cologne of Villaplana. I brought two of my friends from Finance of America, Shaun and Angel. Guys, introduce yourself.
You doing good, man?
Hello, my name is Angel Cartagena from Finance of America Mortgage. I am a mortgage advisor. This is my branch manager, Shaun Sproul.
Hey, how are you? Shaun Sproul, New York area manager for Finance of America. Happy to be here with my good buddy, Steve.
Great. And if you can tell, Mr. Cartagena over here speaks, he's bilingual. That's always a plus for you guys out there. So, I wanted to do a video where I could send to clients that are struggling in the whole, well, why is my loan taking X amount of time? Or what I deal with most, honestly, dealing with a seller's attorney who does not really understand the process. And I wanted to utilize this video, especially when I'm getting what's called the time of the essence, which for those of you who are watching don't know is when the seller's trying to tell us we're in default because we're taking too long.
Yeah.
So guys, can you talk about what goes into clearing a loan? What do you guys do, and when do you decide to submit your paperwork for a clear?
Okay, so basically, once we start the loan process, we gather as much information as possible to avoid that happening in the middle of the end, towards the end of the loan. So once the file goes into underwriting reviews all the documents. Once it comes out of underwriting, our goal is to have very minimum conditions. Conditions are basically additional documents that underwriting will ask for, just to confirm some information that we already provided.
It's stipulations for the approval.
Correct.
To have a final loan approval. That's
Correct.
what
So you say
happens.
basically the first time it goes into underwriting is for commitment, basically.
Yeah, so that's to get your actual loan approval / commitment letter. That is the binding agreement between us, the bank, and the borrower to say, hey, we're going to lend you this money with these conditions. The condition could be, hey, you just need homeowners insurance. You need to explain what this pay stub deduction is on your, on a pay stub. Or it could be many of, a few different things that they just want to clarify. Hey, you have 3 addresses. Which one do you really live at? Stuff like that. So once all of those conditions or stipulations are cleared or submitted for clearance, then the underwriter might, and we always say this is called Pandora's box. It might open up another can of worms, which, we try to avoid, but sometimes that happens. So all of these things take place. I mean, I've had clients where, unfortunately, in the middle of the loan, we'll get an alert that the borrower took out extra credit. That slows down the process, So all these different things is what will end up slowing down. I have a borrower right now that's ready to close. We submit him for the clear to close, and what happens, we find out he just got a collection on his credit. So now we have to go and rerun a new credit, and his score drops. So now what we have to do, fix the credit. So there's so many different things that just slow up the process. And this is what happens. And then we hate to hear that time of the essence. That's not where we ever want to be. That means that the seller's already at their wit's end and they're tired of waiting. So we hate to have that happen,
So that's interesting. So sometimes there are things that you get a commitment, right? And all of a sudden everyone thinks, well, you should be closing right away. But there's things that happen that are not the buyer's fault. And then there's things that happen that may be the buyer's fault. And on that point, and kind of to segue, to you buyers out there, I know that you're grown and no one should tell you when you can get your own car or when you can, get a discount at Macy's, but speak to your lender for those reasons. I'm not saying you can't. They'll tell you what you can do and what you can't do, or they'll tell you you could do that, but this is the ultimate result, or this could be the result. So guys,
I want to give a quick
sure.
example. Actually, President's Day just passed, and my buyer goes out and says, "Oh, I'm closing on the house in a week. I'm gonna go take advantage of the President's Day sales." Why? You just ran up $5,000 on a credit.
Happens all the time.
Like, what are you doing? Like, wait till the loan is ready that we say, hey, you're cleared to close. Then whatever, but until then, don't go out and go shopping and do all this stuff. Everybody wants to buy furniture prior to closing, and it doesn't work like that because you could screw up the loan.
Right, and the reason why you can screw it up, from my experience dealing with clients, so every loan has what's called debt to income ratios. So if that monthly payment, now even if it's a short-term monthly payment, it can take you out of being qualified for that loan. And now you have to go through trying to pay that off. at the very least, even if it doesn't disqualify you, and it looks for experience, when I've done a refinance or whatnot, it's going to at least trigger a question, a possible letter of explanation, or it's going to just kick it back from a clear to close until you clear that condition. All right, but again, for my sales attorneys out there, not every time it's the client's fault. So guys, what are some things that, so you get the commitment, when from the commitment do you submit to a clear to close, and why? And if you don't understand what I'm saying, I guess I can ask another way. You let me know.
It would all, and I totally understand the question. So it would all depend on how many items is on that commitment. Sometimes we get commitments with 2-3 items on it. Sometimes you might have 10. Okay. It depends on how much stuff we could grab up front prior to putting in the file. Us here, we try to put in as much as we can up front, so we have those minimal conditions so we can close. But there's many times where we've been clear to close and we sat and waited for the seller for 2 months. Mm-hmm. Every month that goes by, we need new pay stubs, new bank statement. So this is what slows things down, and it's not. And this is just on the buyer's side, where there's been numerous times where the seller is not ready to close, or the seller's attorney didn't do their job to clear title for the seller side. Mm. And now we're waiting, or they figured out somebody died and they need to, get, death certificates, all this other good stuff before they can now close. It's many things happen where it's not the buyer's fault.
True, and then at some point it delays the buyer, like you're saying, because rerunning paperwork, or maybe the buyer didn't listen to me. One of the things I tell my clients is, don't lock your rate until you spoke to your lender, and you also spoke to our office to make sure title is clear, right? Because like you said, death certificate, it could be letters of administration. They have to be renewed every 6 months. Sometimes the sales attorney doesn't tell a client, or the surrogate's court right now, may be closed or something like that.
Yeah. So
I tell my clients, call us to make sure, to our best guess, that title is clear, for us to contact the seller and make sure that, hey, they're able to move in the time period that you have this rate lock. Because, folks, unfortunately, how unfair it is, although sellers may do it, sellers never have to pay for your bank fees.
Extension fees.
Extension fees, again, if there's a rate lock, you have an extension fee. They're never required to pay any bank fees, because they don't care if you're buying cash or you're going with a bank.
Correct.
All right, so that's something that's really important. And you can't blame the lender or can't blame the seller if you lock and unfortunately you're not able to close. That's very important, why we work with a good team. We try to work with people that we also know, for the fact that you don't want to go with an attorney that's going to take a vacation and not let anyone close while they're gone. So, keep about those.
We've had that many.
We had those many times, right? So, all right. So now, going back to what I was talking about before. So you say to your client, "All right, client, I think we have everything. Let's submit for clear." Tell me more of that process, things that happen, etc.
So, Steve, like you mentioned, the rate lock is very important. That's one of the things that we need to do in order to submit the loan to get a clear to close. Right. So again, the communication is big with yourself, with your team, and with the client, to say, hey, let's make sure that we're all in communication, so we know, hey, title's cleared.
Insurance is done.
Insurance is done. That's another thing that we need to have an insurance binder, and we need to the insurance company needs to have a tentative date. Mm-hmm. It doesn't have to be the exact date, but they need to know, hey, we're going to close in the next week, 2 weeks, whatever it is. So those are the things that we do to submit the file to underwriting for the final clearance. We make sure that the bank statements are up to date, the pay stubs are up to date. With COVID, those time frames kind of got shortened. When I say that is that before, a pay stub would be good for X amount of time, mm-hmm. Right? Bank statements would be good for an X amount of time. Credit would be good for an X amount of time. And like Shaun mentioned earlier, we have to update these documents in a shorter period of time. So again, when someone hears we're submitting a file for clearance, they think, oh, I'm in the clear. Let me just go and buy something or whatever, or take advantage of that sale or whatever it is. And that slows down the process. But those are the things that we do. We lock the rate. We make sure that we have the insurance binder in place, and we make sure we double check that the pay stubs, bank statements, all the documents are up to date, so the file can go from underwriting to the closing department.
Another issue I see that comes up, a lot of companies are working remotely, so we need to do a verbal verification of employment. Sometimes we can't get nobody on the phone.
Right.
So those are things that happen that'll slow down the process, and then we have to go and get, the buyer or whatever involved and say, hey, find us somebody who can we can get on the phone to just verify you still work here and stuff like that. So the little things like this always kind of comes up sometimes at the last minute, but of course, we do our due diligence to kind of just make it happen right away.
All right, so that's important. Yeah, and I've had situations where we've had the VOE, it's known in the industry, where someone gave a number that's not working. So folks, make sure you have a backup number, or let those people know that there's going to be a call, and make sure they don't make any funny statements.
Don't quit your job before
Yes.
closing.
Yes.
We got that too. I don't understand that.
Yeah, that's very important, super important, that a lot of people don't understand. Why are you verifying my employment right before I close? I already gave you my bank statements, my pay stubs, my W-2s. I gave you everything. Sometimes we have to get a verification of employment form completed, so they think that because all this stuff is done, that it's over. But what happens? I've been in situations where I'm literally in the office preparing a nice little package for the closing. Right before I'm walking out the office, so-and-so quit their job. I'm like, wait, that's my client. So it happens. It's not necessarily that they lost their job. They might have changed their job and not told me. So there's a lot of moving parts, and we have to make sure that we all stay in communication, and we keep the client in line with everything that goes on from start to finish.
It's a team effort.
Right. So the moral of the story, and I'm going to change gears in a second, but the moral of the story is, yes, you're an adult, yes, you're your own person, and we can never tell you what to do because we work for you. But we're experienced enough to know that if there's certain things you do, it is going to cause a complication, like quitting your job and switching to a new job. The main thing is, like I said before, keep your team involved in your decision, and we can help you make the best decision possible. At least you have that information. Now, when I said change gears, I wanted to go into expectations, right? You've been dealing with a client for a while. You've managed and you've fulfilled all your promises to them. I'll get back to you by this day. I'll get this into here. Now, what happens when it leaves your desk and it goes to underwriting? Or what power do you have over the clear to close?
We all work within time frames. So at the end of the day, if we know that the deal's leaving my processor's desk to go back to the underwriter, we have turn times that they have to adhere to. So whether it's 24 hours, 48 hours, 72 hours on a busy time, they have to get back to us within that time and let us know, hey, this is what you're missing or not missing. Here's your clear. So as long as that time frame is up to there and adhered to, we should all be on the same page towards when we're going to really get an answer.
Okay, and then when you guys get the final clear to close, what happens and what is out of your hands?
So a lot of lenders, they'll wait to send out their closing disclosure, which is something that everybody has to get prior to closing. A lot of lenders send it out when the file is actually clear to close. We actually send it out early. So by law, you have to give them 3 days. So we normally send it out about a week before the closing. This way we don't have to wait. So a lot of our deals which you've been involved in, we're clear to close in the morning and we're closing in the afternoon or the next day, whatever the case may be, because sometimes that's how we have to get it done. But normally, once the file's clear, we give it to you and you go and work on getting a schedule. And you're going to be speaking to all the parties, of course, your schedule, buyer's attorney, the buyer's attorney, seller's attorney, or everybody is involved, and even title company, make sure everybody could be in one place at one time.
And so just to add on to that, as a buyer's attorney and bank attorney, the problem, so once your lender has given you that clear to close, and I do have another video on my site, you're clear to close, what happens next. And
now what?
Yeah, exactly. Just go watch that video as well, because that's going to go into a little bit more. But just in short, there are a lot of pieces that have to be in place. Your lender promised you, hey, I got your loan clear. That does not mean you're closing the next day, because we cannot force the seller to be at a specific location at a specific time.
Correct.
Right now it is so busy, and I don't know how long this video will last. Maybe you watch this video in a time that it's not as busy, but the bottom line, title companies have to have closers available. The seller attorney, like I said, have to be available. The sellers may have a work schedule. The buyers may have a work schedule. There may be vacations planned. So a lot of things happen where and if I'm not the bank attorney, you have a bank attorney schedule. So there's a lot of times that there's things that are out of the control of the schedulers. So try to give your partners, your lenders, your attorneys that are working with you a little bit of a break, because once you get it clear to close, that does not mean you may be closing that week. You may have to close the next week. Be a little flexible. Just ask us the questions, and we're going to give you the answers of the on the process and where you're at. We're going to do the best to accommodate, because after all, we work for you.
Absolutely. Absolutely.
You guys want to add anything else at all to the audience?
Just to touch base on the scheduling, that's the number one question that we get once we're clear to close. When am I closing? When am I closing? And we always refer them back to their attorney. I say, listen, your attorney will give you guidance on, what happens from here. Okay. The only time that we get involved is if documents are due to expire, and we'll let you know ahead of time. We always communicate, say, hey, rate expires X date, bank statements might expire, so we always keep you informed, the attorneys. But that's something that we don't get involved in scheduling, because again, like Steve said, there's a lot of other parties involved, and we're in a time right now that it's very difficult to get everyone in one room, same day, same time. So
Well,
The takeaway is, even with rate locks, we're very generous. So a lot of lenders will definitely charge clients. If it's 1 day, 2 day, whatever, we'll do it for free. That the borrower's not charged.
Okay.
Which that's big. We try to give back as much as we can.
oh, that's amazing. And I've known you've done that before too. I was actually wondering, well, why does one bank can do a few days for free, other banks give you such a hard time? But I guess that you're just particular.
Yeah, listen, a lot of people want to charge the borrower for a nickel and diming them for everything, and we don't. We
Good
try
to
to do
know.
the right
Good to
thing
know.
by them.
Well, great. So Angel and Shaun are available anytime you need them. They're going to have their information right after this video ends. Write it down, ask them any questions you may need, and as always, I'm available as well.
Thank you for having us.
thank you.
Thank you for coming.
Steve.
Hope you're enjoying the videos that you've watched today. They're not meant to be a substitution for speaking with your legal professional, but just an educational tool. Thank you.